have Nasir Salim, managing partner at Flexi Capital, joining us. A record high anticipated for markets in just minutes from now. Nasir, exit polls showing the BJP-led NDA will win 350 to 375 seats. All of this really on expected lines?
Good morning, Sakshi. Yes, absolutely. I think, we've been looking out for triggers, and 3rd June seems to be the day for triggers, which are essentially, macro financial stability. There's obviously belief that there is a government of the day which comes in full, majority, will bring in focus on capex, investments in manufacturing. There is also improvement in foreign flows. Cash has been waiting on the sidelines, Sakshi, for many, many weeks now. And 3rd June and 4th June are critical in terms of deployment, and that will be seen possibly today. I think the other very quick thing that my fellow panelists just mentioned before I came in on your show is about GDP numbers. So, close to heels of strong GDP numbers and the recent build-up of FII in positions in derivatives gives you a very, very clear indication of how and where the markets will, in terms of rise, and it could be a euphoric rise, markets and experts like all of us completely believe that a stable government of the day will ensure less ambiguity, more prudence on policy, framework, execution, and that is what will essentially outweigh on the sentiments as far as the capital markets are concerned.
That's right. Mithali, do you agree? Better than expected GDP data also coming in, boosting the market sentiment and likely to boost the market sentiment today as well?
Absolutely, Sakshi. We've been discussing this for, all of last week. The GDP data has been very encouraging. And as I was pointing out last week as well, the biggest aspect of the GDP data being encouraging is the growth in the manufacturing sector. So, when we look at the growth in the manufacturing sector coming out in the GDP for the entire year of FY 23-24, it is standing at a staggering 10%. And that's never been seen before in recent years. Post-COVID, this is the first time that we're seeing a number like this. Last year, we actually had a contraction in the manufacturing sector. So, this kind of an encouraging trend shows and makes the market confident that when you have a stable government coming in, there will be policy continuity. The manufacturing sector will continue to get priority. The services sector, which was already doing well, particularly financial services doing very well, real estate doing very well, all of these are sectors which are traded on the stock market. So, that linkage between the real economy and the financial economy becomes very strong when you see that it's somewhere around an election time. How is my policy continuity going to impact the valuation of the equities that I hold? And then, of course, the GDP data coming out like this. Both of those are creating a very positive sentiment in the market. There will definitely be some buying today, and then maybe some, short selling on Thursday. But at the same time, this week is going to be very exciting for the markets.
Well, the moment we were waiting for is here. Nifty surging over 800 points, a fresh record high. The Nifty and the Sensex surging over 3%. We are seeing markets react to what was anticipated as per the GIFT Nifty and, of course, the exit polls at the moment. We are seeing, of course, markets surge to record highs. Many, of course, also feel that, look, these are historical times, Nasir, going forward as well, not just for this day, but for the week ahead. Your thoughts?
We saw the GIFT City numbers a while ago. It was on expected lines. Sensex and Nifty today's opened up now, and you can see it clearly, showing up in terms of its momentum. I think clearly I agree with my fellow panelist. There's going to be some short selling on Thursday. And of course, triggers are going to continue to be looked at. Hopefully tomorrow is going to be another very interesting day, and where one is assuming the broad assumption is that these exit polls will hold, and the markets will continue to. Experts believe that the exit polls will continue to hold, and the markets will continue to go upwards. I think the few things that I would want to say here is more for your viewers is that please don't get carried away. You have to understand your own objectives in investing. It comes in with its own risks. Don't be short term in your goal. Don't be myopic. Please don't get carried away. I think the other quick thing is that there are sectors which we feel we are overweight on. Those are financials. Is something which is looking very positive amidst this euphoric rise in the stock markets. Then there is FMCG and consumption. We are expecting a better than forecasted monsoon for this year, and this entire consumerism play is picking up very, very strongly, looking very favorable. The other sector that we are very, overweight on, and we are looking very carefully, and we feel that there will be some great catch up to do is manufacturing, because all of these sectors, barring consumption, if you see financial services and the BFSI space, and especially X of banks, and if I look at NBFCs, that space, along with manufacturing and some support to infra in terms of capex and growth, will ensure, because if interest rates come down at some point in time, we're also expecting interest rates to come down. And I'm sure you would also want to note today that the rupee dollar has also, the rupee has gained as we speak. Sakshi, I'm looking at the numbers, it's now at 82.99.
Right.
There has been a substantial increase in the rupee as well. And we also expect that the government GSEC will also fall today. We expected the rates to signify this current burst in the stock market.
Absolutely. Right. A strong uptick in markets, just as we were anticipating. Mitali, do you agree that this will not just impact today, but also the week ahead? The exit polls showing the BJP-led NDA government will win 350 to 375 seats. Now, if this is true, do you feel the week ahead could also be historic for India's stock markets?
So, Sakshi, I think it's going to be an interesting week. There's definitely going to be a lot more trading activity. But are we going to definitely see those highs towards the end of the week? I would say probably not. I think we'll see the highs today because, today is anticipation. Then there is a confirmation, right? Because on Tuesday, we'll actually know the real picture and the real data of where the government is getting formed. How is it, what is it going to look like? Is there going to be policy continuity or not? And then I think through the rest of the week, there will be an adjustment. Exactly as your expert from NDTV Profit also pointed out, the rest of the week is going to be an adjustment week. So today is the day when we are going to see a huge uptick and huge amount of trading activity. But is it going to be a historic high? I don't think so.
Okay, so Nasir, do you agree that these gains really could be limited just to today and not for the week ahead? Perhaps, what is your first thoughts? And you feel the euphoria is just related to exit polls alone?
Actually, this euphoria is purely event based. I agree.
Exactly.
This is because of, everybody was anticipating 3rd June to have, and the right word is actually anticipation. I like that word. Subsequently tomorrow we'll get to know what exactly are the real numbers. Today there is more of aspiration and anticipation to kind of make good money, and that is where the fear comes in as well. So this is very short term. We have to see where the results will come out tomorrow and where they will stand in actual, and thereafter what will stand out is the next few days in terms of the government formation, the other contours to a government formation for a more stable government, and then thereafter, the next 100 days in terms of the execution. So, this could be a short gain that we expect on expected lines. Historically, if you've seen after every Lok Sabha exit polls, given if there is continuity, the stock market rewards you for a day or two, and then subsequently it kind of adjusts to the reality. I think, when we're saying there is a lot of euphoric rise in the stock markets, it also comes in with a sense of responsibility to make sure that, we are aware of the risks in equity as an asset class. And I think that is something which needs to be kept in mind.
Right. Be mindful of the risks, you say. So gains really were expected on both technical and fundamental basis. Nasir, what would you say?
Well, frankly, both fundamentally a little less, because it's obviously, nothing can change fundamentally between a Friday and a Monday. But, I think more so from the perspective of news flow. This rise is more news flow and news related. Sakshi, of course, there are individual stocks that have their own fundamentals and technicals at play, but this is more news flow. I would not say that this is fundamental because everything cannot change. Fundamentals can't change between Friday and a Monday.
Mm-hmm.
Exactly.
All right, that's what you feel. Of course, Mithali, to you now, sectors that you feel will outperform going forward. Very important to note that, of course, people who are tracking the markets very closely will now want to know which sectors will outperform in the week ahead or in the next few weeks ahead.
Thanks, Sakshi. So I think, there are two types of performances that we can talk about. And I think in economics, we always separate the financial performance from the economic performance. So we know that manufacturing as a sector is set to, take off, logistics is going to take off. And we know that these two sectors have been already performing very well last year. And financial services is also performing very well. Now, linked to these sectors, I definitely feel that companies that are linked to these sectors, which are supply chain, participants, will be performing very well in the financial markets as well. But as Nasir said, there are certain stocks which are doing very, very well. And in those sectors like aviation, like transport-related sectors, energy-related sectors, renewable energy-related sectors, there's going to be an increase over time. It won't be immediate, but it will take time and it will happen because these are fundamentally strengthening as companies. And we're going to start seeing people and especially first-time buyers recognize that, these companies are actually doing very well. The balance sheets are doing well. They're also getting subsidies and, they're getting support from governments. So I think those companies, stocks and sectors will do very well.
All right, and levels really to watch out for, Nasir. Of course, many predictions being made about the next 5 years already. So what are the levels really that you will watch out for, both on the Nifty and the Sensex?
Actually, to be fair and honest, because of my regulator, I can't give levels on your show. But look, there is a lot of belief, and I can quote a few, analysts who've been saying that we can be Nifty can be at about 50,000 in the next 5 years. There is belief that clearly. I mean, what's more important apart from levels, Sakshi, is policy, clear policy and framework. If you have a stable government, in the day, you will ensure that there is, more execution that happens flawlessly, seamlessly. There is more clarity of, your policy and your framework. There is, and if it's a hung parliament, for example, or if there is an inverse relationship in terms of, the number of participants in the Lok Sabha formation of the government, there will be, a lot of impact, negative impact, because, there is belief that, a stable government of the day will ensure, as I told you repeatedly, more execution will happen seamlessly, and therefore the targets will increase. I mean, Sensex and Nifty will subsequently increase because if the government is, and the order is doing better and delivering on the ground in some of the promises that they've made, and it could be any government, right? It's not about one particular government versus the other. The market is more interested in a stable government with a clear forecast as the market accounts for future earnings and future projections. And that has to be basis clear projections. So it's clear versus future. If it's a clear vision ahead, the future will be bright. If the vision is not clear ahead, the future will become a little subdued. That is the point, I think, more important.
Right. So the clear message really coming from both of you is that, look, stability will ensure consistency, and reforms, more and more reforms being implemented, will be great for India's economy and India's stock market going forward. Thanks very much for joining us on this discussion. We will continue to track the markets. And of course, for now, we will also track the economy and the fundamentals there as well. But the impact of the exit polls being seen on India's stock market.